G'day folks, welcome back to the weekend review of natural gas and the ETFs. Now the daily has turned bearish, but a bit of a seesawing effect recently, but it's turned bearish again and last day of trading. Before you go any further, make sure you hit that like and subscribe button. Also, we're introducing a new segment to the channel. It's basically for newbies, so for those new to trading, we're going to aim to cover the basics and 101 approach to investing, and that'll help you better understand my approach and using the moving averages on the price as well as the commodity channel index. And that's video series, which will probably be once a week, will include my sidekick Joy, and she'll be asking newbie questions. So again, if you've got anyone in your family or friends that are new to trading, that might be a video to help start with their investing approach in chart analysis. Okay, let's get stuck into it. But first, in terms of the outlook, as of today, April 5th, just a quick summary of the ETFs. BOIL seeks to achieve twice the daily performance of the Bloomberg Natural Gas Subindex. KOLD aims for twice the inverse of the daily performance of the Bloomberg Natural Gas Subindex. And UNG designed to track the daily changes in the spot price of natural gas through near-month future contracts. In terms of the AI data processing demand, the rapid expansion of AI data centers is significantly increasing electricity demand. By 2027, power demand is projected to reach 84 gigawatts, with AI-driven workloads accounting for 27% of this demand. To meet these needs, companies are investing in natural gas infrastructure, such as the $10 billion transformation of Pennsylvania's Homer City generating station into a 4.5 gigawatt gas-powered data center campus. This trend underscores a growing reliance on natural gas to support the energy-intensive operations of AI data centers. So again, first starting with the natural gas commodity price, we look at the long-term trends first. We've got the monthly, the weekly, and the daily. Now you'll notice we've got these moving averages with the price above the moving averages of both the CCI and the price. That's a bullish momentum. So bullish momentum on the monthly, also bullish on the weekly. And there's no divergence I can see on neither one of those. But on the daily, what we have here is, I've drawn some trend lines here along those tops, and it's actually broken through this minus support at 39.45 and further downside projected. Now there was no divergence on the daily, but if we were to draw a Fibonacci retrace on the daily down to that low, you can see there it's broken through that 50%, which corresponds with this support line, and it's approaching this 61% Fibonacci level. And we'll see how far it goes, but at the moment you can see there on the CCI it's been bearish for most of that period since the early March period around the 12th of March, and now it had a couple of breaks above the moving averages, but it's still trending to the downside. So avoid going long. Now if we go to the intraday charts, again using the daily as a reference, we only take short trades, and again you can see here there's various trend lines. This upper trend line, it's having trouble breaking through, and this lower diagonal trend line, which is approaching at the moment. So at the moment, we see here we've had a couple of bullish divergence back here, and it's bounced, and that bounced near the 100% retrace level of the of that previous high. But we had another very narrow, almost double top there on the CCI versus high highs in the price, and that actually broke down. And just as a measurement for Fibonacci down to that level, you can see there it broke just below that 50% level. Then it bounced down from that diagonal trend line, and it's now heading further down below the 61%, as we said, but taking short trades only. Now if we go to the back testing, let's clean this up a bit. If we go to the back testing, let me hide those. What we do is we started the back testing from around the 1st of April, which was this period back here. Hang on, where is it? No, back here, sorry. That's where the price broke below the moving averages, and so did the CCI. And that's where it started here. So the stop loss approach here had a few entries, and it closed out with a profit, the baseline of 100,000, but a profit of 2,770. This is for a natural gas $10 contract. And on the average down approach, it averaged down a few times there, and that closed out with still operating actually, with a profit of 13,820. And at the moment, you'd still keep the trade open until that CCI touches that moving average range. So basically the entry parameters is when the price and the moving averages break below the CCI, and that applies to the trading trend on the daily. You close it out when the CCI touches that moving average band. okay, and avoid going long on the hourly in this case, at that point, at that period there, unless the daily is also broken higher. In this case, it did break just above that moving average on the daily of the CCI and above the price, but notice the price is still trending, the moving averages are still trending downwards. We want to see the moving averages at the very least break higher in a flat positioning like that, or better still, I want to see the band start to curve up that way. So this is BOIL. We've got short positioning at the moment on the monthly. The price is below the moving averages. There's no CCI for it there, so we can't really confirm what the CCI is doing there. On the weekly, we did have a break above the moving averages on the price chart, and that was a result of this bullish divergence on the CCI, and that's a very long-term bullish divergence starting back in 2023 versus lower lows on the price, and it actually broke higher than that previous high there, so that confirmed a bullish move on the weekly. And on the daily, if I zoom in, we've actually hit this resistance up here at 107.11, and since then it's been tracking down between these two diagonal descending trend lines, and that was a result of this bearish divergence, lower highs on the CCI versus higher highs on the price, hit a double, almost a double top there, and then it's started falling since then, and the price and the CCI are still trending to the downside. If we go to the intraday chart on the 1 hour, again using the daily as a reference, we take only short trades, and you can see there that would have been again in line with the daily, taking only short trades, and at the moment you're still in a trade with the price and the CCI trending below the moving averages, so that's still a trade open, and close it out when that CCI touches that moving average band. So in terms of backtesting for BOIL, I've started the backtesting here around the 12th of March, which is back at this point here when the CCI broke below the moving average range. Now, to be honest, that would have been a bit too premature to enter the trade back there. I'm just giving you a demonstration of what it would have looked like had you entered there. Now, in this case, the price did actually continue sideways for a while, then it broke to the downside in accordance with the CCI. But just be careful, because sometimes you can actually touch this band and then bounce out of there and still go long. So, but at that point, you'd have to quickly close out the position if you got caught out. So to have a bit more confidence, I'd like to see the moving average band turn down like it did back here. But anyway, I've started the back test at that point of the 12th of March, back there. And even if you started it back here where the price did actually break below and the moving average band started trending down, that would have been around this point here, around the 20th of March anyway, which was that period back there. Nonetheless, the stop loss approach has generated $246 with $1,000 invested for each bunch of shares invested, and the average down once at that point there, and that so far has generated $367. You'll be ready to close that out as soon as that CCI on the moving average hits that moving average band, and take your profits off the table. So for KOLD on the monthly, we've got a bearish momentum with the price below the moving averages. The CCI looks like it's probably bullish, but I'm not going to call that yet. Looks like a bearish movement on the price, so bearish momentum at the moment on the monthly. On the weekly, again very strongly bearish with both the CCI and the price below the moving averages. Notice though the CCI is approaching the moving average band, which may correct. And on the daily, we've bounced off this minor support at 1621. That was a result of this bullish divergence, higher lows on the CCI versus lower lows on the price. It's actually bounced up through that moving average range, a very narrow range. And we'll go to the intraday chart if you want to see how we trade that on the hourly. So basically what we've got here, even though the CCI, this is the daily, this is the hourly, so even though the CCI is broken up through the moving average band on the daily there, notice where the price is. It's well below the moving average band, so we don't take any long trades during this period. You would not have taken that long trade there because the moving average band was still trending in a downward trajectory. You want to see it start at the very least flattening out like it is at the moment. So ideally, you want to see this moving average band start curving up, and you'd be taking one of these long trades when above this very narrow moving average band, and that's where I've started the back test. But at the moment, taking long trades only in accordance with the daily price and CCI movement. So if we go to the back test for the long positions, so what I've done here is I've started it on the hourly here. I've started it on the 26th of March, which happens to be at that near that high there where the CCI is above the moving average, and so is the price above the very narrow moving average band. And the stop loss approaches so far is generated $106 with $1,000 invested in shares, and this one is averaged down once, and that's broken now to $190 return, and you'd be ready to close that out as soon as that touches the moving average band on the CCI. So for UNG, we've got a slight bullish momentum at the moment on the monthly. It's broken above the moving average band, but notice the moving averages are still in a downward trajectory. The CCI is broken up through that moving average band, so I'd call that a neutral positioning at the moment. On the weekly, we're still just bullish on the CCI and the price, but notice that CCI is going to break into that moving average band if this continues to decline, so just keep an eye out for that. On the daily, if I zoom in on this one, it bounced off this resistance at 24.13. That was a result of this bearish divergence. This is similar to BOAL in terms of chart action, and it's broken down below that moving average band on the daily, and notice that CCI is also below that moving average band. So bearish momentum at the moment. If we go to the intraday chart, the 1 hour chart, we take only short trades in alignment with the daily, and at the moment you would have taken a last entry at that point, and you'd be closing it as soon as that CCI touches the moving average band. Now if we go to the back test, now similar to BOAL, I've started the back test here when the CCI broke below the moving average, that narrow range there, but notice the price was still above that moving average band, so ideally should not have done that. Doesn't really matter in terms of, I'm just demonstrating what it would have looked like had you got in early, and it was not really a big concern because the price was still giving you some returns, and I suppose the price did actually keep falling, but again, always remember, if it doesn't, they could always bounce out of there, so just be wary of that. But ideally you want to get it when the moving averages are starting to turn down like they were there. So any one of those red candles would have been a better place to enter, a safer place I should say, with the CCI still dropping. And what it's done so far is the stop loss approach has generated $170 with one lot of shares, or maybe a few trades made, but a $1,000 lot of shares traded, returning $170, and the average down approach is again one lot of shares only traded with $170. So the same result occurred for both the average down and the stop loss approach. So thanks for watching, and don't forget there is an introductory level for newbies if you want to learn how to set up and analyze the charts as a beginner. Reference the chart setup with Pete's Investing +1, and I've got the link in the description below if you want to access that video, and I'll be putting those out on a weekly basis. Thanks for watching, and I'll see you in the next update.